Today, I'm joined by Willem Middelkoop, founder of the Commodity Discovery Fund and author of The Big Reset. Willem, welcome to Forward Guidance.
Well, great to be on your show finally. So thanks.
Yeah, Willem, you have a lot of views on fiat money, on gold, on Bitcoin. Can you tell us a little bit about your journey in sort of learning about finance and how you developed the analysis that you have about fiat money, which is, somewhat orthogonal to the mainstream view?
I was a journalist actually in the 1980s and 1990s, and I was interested in the financial system. I was started to invest in real estate in the 1990s. I bought some apartments in the Netherlands, rented them out to expats, and that was quite a new, a new way for me to invest and think about money, learn about money. And I didn't put any of my own savings in those investments, so I had mortgages. It was very easy in the Netherlands to get mortgages for 120% of your of the value of the apartment. So and then I started to learn what leverage is, and it was great on the way up. And these investments, real estate was rising 5, 10, 15% a year. But as soon as I had collected 8 or 9 apartments, I thought this leverage could be killing me on the way down. So I really started to study the financial system, the history of financial markets, the history of money. And then I became quite scared. So this was in the late 90s. And actually, I started to take profit on my real estate in the early 2000s and started to hedge myself by buying into gold and silver investments. So I've been worried about the monetary system, a fiat money system, for almost 20 years. And as I learned more and more about the system, I became increasingly worried. I wrote a few books on this topic. The Big Reset has been translated to 7 languages, so that's the best known. And I always predicted that one day we could end up into this major crisis into the in this monetary system.
And what do you think are the fundamental weaknesses, as you see them, of our current fiat money system? And is there a time in history where you look back and you say, aha, that it may not have been perfect, but it was a more stable, a more robust system than we have now?
Well, when you study monetary history, you learn that we've had several hundreds of currencies in the last few hundred years. So there was even an appendix in the Big Reset, which we published, and this appendix shows that over the last 200-300 years, more than 100 currencies failed, and they all failed due to the fact that they were fiat systems. There wasn't any gold backing anymore. So it's a guarantee that a fiat money system fails in the end. So most people are surprised when they hear this. So it's not that difficult to predict that the current monetary system will have a lot of stress once the debasement of currency gets into a higher gear. And that's what happened after the Lehman crash first in 2008. And now after the start of Corona, early 2020, we've seen an incredible amount of money being added to the balance sheets of central banks. And this is the reason why inflation is picking up now. So the system really becomes stressed. And once a system gets stressed, the central banks can only do one thing, and it's lower the interest rates towards zero. And then they're trapped. And that's where we find ourselves now. And it's a very dangerous situation.
So if you had to sort of say that the fiat monetary system is a dam, and you see various cracks in the dam, which would you say is the greatest fissure and is the most likely to burst? Would it be inflation, or would it just be the level of debt? And also, what does debasement mean? I believe it's a term used for you had a gold coin and you debase it by decreasing the quantity, the percentage, the composition of gold in a coin. What does debasement even mean in when you have fiat currency? Is it a metaphor that's no longer applies?
If you study the anchor of monetary systems, then you'll see that every 60, 70, 80, 90 years, there's a new world reserve currency. So we used to have the British Empire, and then the pound sterling was the main world reserve currency. That ended at the start of the First World War. Before that, we had the Dutch guilder and we had the Spanish pesos. And so that every generation we see a new world reserve currency. And what we often see is these new world reserve currencies, they start strong. For example, at the end of the Second World War, when we had the Bretton Woods Conference in 1944, the US proposed a plan to use the US dollar as the anchor for the world's financial system. But they promised the world that the dollar would be as good as gold. You know, it was backed by gold. And over time, the US printed too many dollars. They lost half of their gold because they had to promise in 1944 at Bretton Woods that other countries could always exchange surplus dollars for gold. And this happened quite a bit in the 1960s. So in 1971, President Nixon, he chose to close the gold window. So from that moment on, the dollar was no longer backed by anything tangible. And we saw this incredible increase of debts and an awful money creation. And this has been ongoing for the last 50 years. So the debasement of currency means that the currency is no longer backed by anything valuable. And central bankers and commercial bankers, you know, they always need more money. They always want to print more money. They always want to see more stimulus, especially when the crisis occurs. And in the end, you end up with a currency which has lost literally 98% of its value since the start of the Federal Reserve in 1913. And then you reach a point that people are getting scared, and they only want to invest in anything the government can't print. And that's when we see this huge inflation. First it starts with asset inflation, and now we see general inflation. And that's the end of the road. And that doesn't mean that everything will collapse. Central bankers, they know this as well. So you need to plan a monetary reset. You need to plan to bring gold back into the system or do anything else to bring trust back into the system.
And tell us about this monetary reset, as you call it, the big reset. What does it entail?
Well, there are three main problems within the current system. So we need to find a new anchor for the world's monetary system. And I predicted in 2014, when I published the big reset, that around 2020 we would need to organize a new Bretton Woods conference to discuss this. Actually, the IMF published, it's still on their website, that they published this around 2020, that there's a need for a new Bretton Woods conference. They actually said it's a new Bretton Woods moment. We had Mark Carney, who was the governor of the Bank of England, making his famous speech now in July 2019, that it was time to find a successor for the dollar. So it's quite clear when you follow the signs and when you follow the insiders that a successor for the dollar is needed. Look at what happened with the national debt, the U.S. national debt. It was around 10 trillion in 2000, and now it's over 30 trillion. So we also need debt restructuring. So that's the second part of a monetary reset. So finding a new anchor, we need debt restructurings worldwide. And I think we need a dollar devaluation. And a dollar devaluation actually is a gold revaluation. And we can get this gold revaluation in two ways. We can see it through the market forces. Actually, it's happening as we speak. Gold is going up back to the old highs of around 2000. But we can also see a gold revaluation being planned and organized by central bankers. This has been done before. In the 1930s, the US devalued the dollar as well. So these developments, I think when we look back in 2030, we'll come to the conclusion that a lot has changed in the last 10 years. And we're in the middle of this process. But once you're in this process, often you don't see the forest because you're surrounded by the trees. And So people always ask me, when will the reset start? I think we're in the process already.
What would have to happen to be sort of a catalyst for it?
One seems to be getting closer and closer. So if inflation is really picking up and is reaching a point in which the yearly inflation is running towards 10% or even higher, I call this a superinflation. So everybody's always talking about hyperinflation, but hyperinflation is very scarce. That doesn't happen very often. But superinflation, where you get inflation rates of 10%, that's happening in a lot of countries. And once more and more investors are starting to sell bonds, exchange bonds, and buy all the government can't print, then you don't have much time. So then you really need to start planning how we can save this system. So another thing to watch is when institutional investors are starting to sell sovereign bonds. And of course, we all know after decrease of interest rates for over 40 years, there's not much money to be made to invest if you're a long-term investor in bonds. So we've seen the first pension funds also here in the Netherlands who start to sell some of their bond positions, bond holdings, and exchange these positions into equities or even physical gold, as we've seen with one of the pension funds here in the Netherlands. So these are all signs that the stress is getting really serious. It's not a problem for the system when 1 or 2% is starting to flee out of bonds. But as soon as 5 or 10% of the investors are starting to follow that, then you have a real serious crisis right away.
Willem, I know a pivotal moment for you is 1971 when the U.S. went off the gold standard. And then in the decade following that, as you correctly note, the U.S. had very high levels of inflation, ultimately leading to the Fed chair, Paul Volcker, jacking up interest rates to as high as 20% on the overnight Fed funds rate. And that sort of...
Just like Russia nowadays, Central Bank of Russia raised rates to 20% yesterday.
Yes, great. We'll get into that. So in the fiat world, sort of the anchor, the anchor, instead of being gold, it's sort of central bankers raising rates. Do you think that has worked over, let's say, the past 50 years since we went off gold, now that, 51-year anniversary? Or do you think it's highly flawed and getting more flawed?
Well, when we had this crisis in the 1970s, and it was after taking the dollar off the gold standard in 1971, we had this era, this decade of inflation and also debasement of currency. And of course, gold was revaluing because of the market forces. And then the crisis was so large, there was really a distrust around the dollar system. So something had to be done. And then Paul Volcker, he jacked up the rates to 20%. What was it, in June 1981? And by doing that, he saved the dollar, he saved the current financial system. And then rates have been coming down ever since. But now it's impossible to raise rates again to levels near 10% or even higher, because the mountain of debt is so enormous that the only way to not implode the system and to service all these debts is to have interest rates close to zero. But now the inflation is picking up, and they're discussing whether they should raise rates with 1/4 or 0.5%. They should discuss if rates would need to go up 4 or 5%, but that's impossible. So in a way, the central bankers are trapped, and a quite well-known Dutch central banker, Lex Hoogdown, who left the Dutch central bank and is quite open now. You can follow him on Twitter. He stated this perfectly clear. The central bankers are trapped, and that's of course a very, very serious situation.
And you've noted that you think the gold price has been suppressed, and you talk just now about how you think in the big reset gold will be revalued to its proper market value. What do you think the proper market value for gold is?
Well, you can calculate that by going back in time, and there's a wonderful graph I often show in presentations, and then I show the increase of the money supply over the last 100, 150 years. and the other line shows the value of gold. And the value of gold always goes back to the amount of money created, but it always jumps. It doesn't follow the money creation in a constant way, but it always jumps much higher once in the 30 or 40 years. We've seen it in the 70s, we've seen it in the 30s, 1930s. And if you calculate the potential level of where gold price should rise to keep up with the growing amount of money being created, you get numbers of around $10,000 per ounce, 15 or even $20,000 per ounce. That sounds ridiculous, but now we're around $2,000 per ounce, so it's only 5x. And if you look at the 1970s, the 1970s started with a gold price of around $35 per ounce, and it ended with over $800 per ounce. So there was 20x. So these kind of changes can happen, but they often happen over a short period of time. And I wouldn't be surprised to see the real move upwards for gold once central bankers decide to revalue gold. So this could happen overnight. We could have a meeting, emergency meeting of, let's say, the central bankers of the G20 on a Sunday afternoon, and they could decide and make public that from the start of trading on Monday, they are buyers of gold and they will pay $10,000 for every ounce. And we've seen that in the past. So it has been, monetary resets like this have been done in the past, and we expect one in the future. But we could also see some other resets. So a gold revaluation is only one of the possible moves they still can make.
Willem, what happens to non-monetary commodities? So not gold, not even silver, although what role silver plays in the big reset, perhaps we can talk as well. But what about oil, palladium, you say, platinum, aluminum, natural gas? What happens to these key commodities? They're not going to be used by central banks as collateral, but they are priced in dollars. And if the dollar is devalued, what happens to their price?
Well, we see it happening today. We see it happening this week. We had this huge crisis in Ukraine starting. The war started last week, and since the start of this war, we've seen almost every day all commodities going up in price. You have the precious metals, you have the monetary metals. Gold and silver are the monetary metals. Platinum and palladium are not monetary metals, but are precious metals. The rise in the price of palladium is enormous because I think 40% of all palladium comes from Russia. But what we see now, and that's I think much more important, we see a rise of commodity prices everywhere. The soft commodities are going up, the wheats and the grains, and this clearly points to investors fleeing to all the government can't print. And when real estate goes up, stocks go up, commodities go up. When everything goes up in price, you should come to the conclusion that money is going down. The value of money is going down. And this is not understood by many. So people talk about inflation, people talk about price going up, but they don't talk about the debasement of the currency. They don't discuss the value of money going down in a way which is really getting scary.
Yeah, as you said the big reset, it requires cooperation between major G20 trading partners. We're seeing the exact opposite today, where the US and many Western European countries are imposing sanctions on Russia, are excluding Russia from the SWIFT system, which is very necessary to conduct large transnational bank settlement payments. So is this more of a hindrance to the big reset or a catalyst? Because I could see it sort of both ways. Because the U.S. dollar, using the dollar as sort of a weapon could turn nations away from the dollar, right?
That's where the big risk is, and that's where we are now, and that's why the position of China is so incredible important, because it's not about Putin. It's about will China support Putin? Because if Russia and China will keep acting in harmony like they've done in the last few years, both of them have stopped buying US treasuries. Both of them have been adding a huge amount of physical gold. So both of them are clearly preparing for the next phase of the monetary system, where the dollar is no longer the anchor of the monetary system. So if China chooses to support Russia, things will get very, very tense very, very, very soon. We in the West, and especially you guys in the US, not being personal,
Yeah, sure.
you love sanctions, and you've been using the dollar as a weapon, and you've been using the financial system as a weapon, and you've been using SWIFT as a weapon. Iran was once kicked out of SWIFT, but people should understand that if you punish a part of the world time and again with your currency, they will start building their own system, and they will start to reject your currency. And if you study the analysis coming from China, Russia, and also the Middle East, they understand this very well. They understand very well how the US has been playing them for decades. And that's why the IMF can't get any real business done in Africa or Latin America, because these countries, they're fed up with the US-centered IMF and World Bank. So they look towards China now to get financing. So we're in a really difficult situation now, because the compromise is getting harder and harder to reach, and we need the cooperation with the two sides to be successful in any reset. So it's not getting any easier now.
Obviously, no one knows how this is going to play out between Russia and Ukraine. No one has a crystal ball. But what do you see as the probabilities in terms of whether a resolution is reached, the impact on the dollar, impact on commodities, particularly wheat, where Ukraine and Russia they produce 25% of the world's wheat production, aluminum, palladium. Sort of, how do you see this playing out?
The only thing possible for Putin in 2014, 2015 was to reach out to China. And the Chinese said, well, we'll help you. So the US made their own enemy in that respect. And now, by pushing the Ukraine towards NATO and being a member of the EU, they really pushed Putin in a corner, and Putin is getting Putin really wanted to take revenge because of all of this. Putin is behaving in a way which is very dangerous now, because he acts like a man who has not much to lose. And now the whole world comes together to punish Russia in a way that they will lose it all. I think if you have a bear cornered and the bear is wounded and he has only one button to push, it's getting very scary. So I get this feeling that everybody's happy now that we're killing Russia in a financial economic way, but don't forget Putin. Something has to give. Putin is still around, and he's not a guy who will throw in the towel. Because of all these sanctions, the Russian economy should collapse severely, and everybody is waiting to see what will happen next. But the repercussions for many of the commodity and metal markets will be quite large, because if you look at the production of palladium, nickel, but also other metals, and also soft commodities, there's a huge amount of soft commodities being produced by Russia and also the Ukraine. And many commodity markets have been stressed for quite some time now. So we see production deficits in quite a number of markets, palladium being one of them. well, when 40% of palladium production can't be exported anymore, um, you will have really a number of companies starting to panic because they simply need this product.
Mm. Willem, I know you've done a lot of work on energy markets. You've written 2 books on the subject. Of course, the last decade was a decade of extremely low energy prices, extremely low metals, very commodity prices across the board were quite low. Can you tell us perhaps why do you think that the next decade will be different, and how drastic do you think it will be? You know, how high do you think oil and natural gas could be? And also, sorry, I know I'm throwing a lot of questions at you, but is, a high oil price, is that actually good for electrification because it stimulates people to get electric vehicles and the like?
Yeah, well, when I wrote my first book on oil and energy, that was in 2007, 2008. And in that book, we predicted that we would need to have a worldwide revolution towards alternatives because you could predict that one day in the not too distant future, you would see a top in the production of cheap oil, especially cheap oil. There's quite a bit of gas, especially in Russia. But even without the crisis in Russia and the Ukraine, it was quite clear that the oil and gas markets would be quite stressed, especially oil. So oil was going up towards $100. Also without this crisis. Now we have this crisis. Don't forget, Russia is responsible for almost 10% of world oil production. So when Russia can't export this to the West because of all the sanctions, there will be a supply shock. Many predicted in this supply shock, oil could go up towards $150, $200. And this will have a huge effect on the inflation. So actually it's the perfect storm. It all comes together. So even without the crisis around Ukraine, we would see very high energy prices. And now we'll get this extra push, pushing inflation up quite a bit more, causing more debasement of currencies. And don't forget that many governments are now pushed towards giving more subsidies because people can't afford energy any longer. So this will give another push to the currency debasement and the inflation. So we're reaching this spiral, which could very well turn into a spiral which gets out of control, and that's when things really get messy.
Mm. And can you speak to the level of the energy crisis in Europe? Perhaps people in the States, people elsewhere in the world that may have heard of elevated energy prices, but just how high are the prices? And then also, I actually think that the natural gas price that everyone quotes, TTF, it actually is it in the Netherlands? And it's getting to very, very high levels. To what degree is that causing serious economic damage in Europe?
Well, taxes on energy are much higher in Europe than in the US. So if you look at petrol prices, we love to go to the US because there we can drive the big cars and hardly pay any serious money to fill it up. But here in the West, here in Western Europe, energy prices have always been quite high, especially because of all the high taxes. But to give you an example, we have a trader who's working behind me. He's just out now, but his energy bill has doubled in the last few months. I have a co-fund manager. His energy bill tripled in the last 12 months. And these are guys who can still pay their bills. But if you look at all the people who have lower incomes, they really need support now, or they can't pay their energy bills any longer. So this is a huge crisis in itself. And because of the Ukraine crisis, prices are starting to move up even more. So this is a huge social crisis, and we are a rich country, the Netherlands. Imagine what this will do with the people in countries like the Ukraine or the Eastern Europe, where the standard of living is much lower. And here we can have subsidies from the government, but there are many countries, and think about Africa or Asia, where people can't get subsidies. So this is really killing also the purchasing power of many ordinary people. So this will be also a drag on the economy and the growth of the economy. So many problems come together now.
Yeah, the United States is an energy superpower, producing almost twice as much energy as it did only a few decades ago. But Europe really is a big importer of energy, and as you say, it relies on Russia for oil and natural gas. Do you think that the sanctions will target the oil and natural gas from Russia? And if so, I mean, how high do you think prices could go for let's say, a barrel of oil, the Brent?
Well, there was this discussion whether we should whether we should disconnect Russia from SWIFT for 100%, and there was a very strong call from, for example, Germany not to do that because they're just too reliable on not only oil and gas but half of the coal. Germany uses a lot of coal for their electricity. They just shut off a few of their nuclear plants January 1st this year. Now they start about doing a 180 degrees flip on their energy policy, and they think about restarting their nuclear plants, which would be a great idea. But they still need the coal, they still need the gas and oil from Russia. But with the current sanctions, the level of sanctions, maybe Russia isn't disconnected from SWIFT for 100%, but is disconnected for 80%. I think this will have huge repercussions for the amount of energy which Russia can deliver. And this is not Putin's choice. Putin always wanted to deliver as much oil and gas as the West needed. But there's an atmosphere here now, also in the Netherlands, in which people say we don't want to send any money to Russia any longer. But nobody is talking about how we can solve our energy crisis without Russia in the next decades. You just can't switch Russia off when they were responsible for almost half of all your energy needs, and people, and this has been a big problem in the energy transition in the last 10 years. People discuss energy in a way like we have the luxury to choose whether we have oil and gas or we have alternatives like wind and solar. But from our analysis, already in 2007, 2008, we learned that we need all the energy we can get. We need oil, gas, nuclear, we need solar, wind, we need it all. And people think way too lightly about how the energy situation can be changed. It's a very difficult situation.
Is the world greening its energy? Is it investing sufficiently in wind and solar? Is it putting enough money in that? And also, what role does nuclear play in the greening of the economy?
Well, nuclear is the only form of energy which is CO2 neutral. So it's one of the cheap and easy ways to have enough electricity, especially here in Europe. Not many people in the US understand, but in Western Europe, during our autumn, we can have 3-4 weeks in a row when we have fog and no wind. So imagine you're in October, November, 4 weeks with fog, no wind, no sun. You can't rely on alternatives. So that's why nuclear energy needs to be part of your energy mix. And even the politicians in Brussels of the European Commission agree now, and even the Green parties are starting to change their opinion now about nuclear energy. So nuclear energy will see a huge revival because we don't have the luxury to choose which form of energy we would like to use. And if we look at the alternatives, of course, it's possible to really invest a lot more into wind and solar parks. But solar parks are wonderful in the Middle East, but it's less efficient in Northern Europe. And of course, we can build a lot of windmills, but if you look at the windmills, you can't build windmills which will be there for the next 100 years. These things need to be replaced. That we need a lot of commodities to build these machines. We need a lot of copper. So in the whole energy transformation, we as investors in commodities, we study which metals will be needed most. And if you look from an investment perspective, we'll need an awful lot of copper. We'll need an awful lot of nickel, lithium and cobalt. And there simply aren't enough discoveries being made for these metals. There simply isn't enough investment. There aren't enough investments available to do exploration. We invest a lot of our money into exploration, but we're one of the few. So governments don't support any exploration efforts. And I think we will learn in the next decade that there will be a shortage for many, many materials and metals needed for this energy transformation.
And what are the knock-on effects where the transition needs all these commodities, but the current economy is just not producing enough of them? I guess the price would go up, but what are the knock-on effects of that?
That's why we started the fund. That's why, I hate to say it, this is an awful situation, but it's good for our fund. It's good for our investors. We were up in February 5-6%, while everybody was down. So when there's a shortage in metals and materials, and when there are production deficits, the price of commodities is going higher, and people will fight for the last available and still undeveloped mining projects. And we had 4 takeovers in our portfolio just in the first 2 months of this year. Normally we have 5 or 6 a year. So there's a scramble ongoing, and you can also see that if you study the behavior of Rio Tinto and BHP, the large mining giants. They're entering markets now in which they weren't comfortable to operate a few years ago. They started to invest in Argentina again. They start to invest in the Yukon, in the Arctic parts of Canada, where you have these large low-grade deposits. So they understand the situation. They understand that they need to act now. But I think investors in commodities will do very well in the next decade with the debasement of currencies, the shortages happening. I think that there will be the perfect storm.
Let's talk about Bitcoin. Your book, The Big Reset, in 2014, you envisioned a scenario where currencies would be pegged to gold. It would be a return there. That was published in 2014. What were your thoughts on Bitcoin at the time, and how did you sort of learn about Bitcoin, and how did your thinking about gold shape your thinking about Bitcoin?
I was tipped about Bitcoin very early on, I think 2011. And people said, study it because that's an interesting new form of money. But I was just too busy building my own companies. I had 2 companies. I also had a Belgian web shop. And I was thinking about Bitcoin, and I thought it could be a form of digital gold. Actually, in the Big Reset, I named it digital gold in 2014, but I was stupid enough not to invest in it myself. I corrected that mistake in 2018 and put 5% of my net worth in Bitcoin. And I think Bitcoin is a way, just like gold and silver, to hedge yourself against the madness in this fiat money system. Because as you might know, the amount of Bitcoins which can ever be mined is set on 21 million Bitcoin. So that's the strongest currency on earth now, because even gold and silver, we can find new gold and silver deposits. We can grow the reserves, but with Bitcoin, it's fixed at 21 million units, and more people are starting to wake up to that fact. And I've been adding to my Bitcoin positions. And what I see a lot with our high net worth investors, we have almost 2,000 high net worth investors, and more and more of them are changing their portfolio, getting rid of bonds, and start to invest in alternatives which are getting scarcer and scarcer. And of course, gold and silver have been the hard assets of choice for thousands of years. But now more and more, even the boomer generation, more and more high net worth people are starting to put a few percent, 5 or 10% of their money into Bitcoin. And because of the supply of Bitcoin, 19 million out of the 21 million Bitcoin have been mined already. I think 60 or 70% of these coins are in cold storage and are not available only for much higher prices. I can envision Bitcoin to go up another 10x.
Time horizons are so tough, but when you see it going to 10x, which would, I don't know, be 400,000 or something like that, how soon do you see that happening? Is that a 5 to 10 year view, or is that, more of a sooner thing?
If you study the boom bust cycles of Bitcoin, which are classic, if it goes up 10, 20, 30, 40x, and then goes down 70 to 90%, and then you have another run. It's my opinion that currently we're at the end of a mid-cycle correction. So we had this huge run from 3,000-4,000 towards 70,000. Now we had this mid-cycle correction, in which Bitcoin came down to almost 30K. And if this is a mid-cycle correction, the second part of this bull market, which started in 2019, will bring Bitcoin, could easily bring Bitcoin to 200,000-300,000. And then we might have another correction cycle. And in the next phase, and that could be 4 or 5 years out, I could well envision Bitcoin getting a value of over 500,000 or maybe even 1 million, because if the money printing will continue, and that's guaranteed, there will be more and more money which will start fleeing to all the hard assets the government can't print. And there are very few around. You have gold and silver. Silver is a very small market. We haven't spoken about silver. The total amount of physical silver being mined yearly is less than $30 billion a year. All silver being mined. That amount of money is being created by the ECB in just 1 month. And if you look at how small the markets are, like Bitcoin and silver, gold is a little larger. But if you look at platinum, palladium, uranium, these are very small markets. These are markets of 5, 10, 20 billion a year. And if you have 300,000 billion of fiat money looking for value, there's so much money around. There's almost 100 trillion in real estate, there's 100 trillion in bonds, there's 100 trillion in stocks, and all the alternative markets are very small. And once more and more people start to understand these risks and start to flee, you can get huge moves.
And you don't think it will be added to? There are some folks, as you know, Willem, who believe that central banks will adopt Bitcoin as a global reserve asset. I don't think I see that happening within the next 10 years, and it sounds like you don't either.
Bitcoin is plan B. So if you're responsible for plan A, being the current monetary system, how stupid will it be to invest in plan B? Because if you invest in plan B, you kill plan A. So this is a very smart move for one central bank in a small country like El Salvador. But it will be a crazy move when G20 countries will start to move that way. Because you kill your own system. And that's why so much pressure is being applied now on El Salvador. Look what IMF is saying. Look what US is saying. They're pressing El Salvador to stop this flight to Bitcoin, because it's a very smart idea for one country, but it's a huge risk for the system. And this is understood by many of the richest guys in the world, and they know that they need to do what El Salvador is doing, flee to plan B. But Bitcoin can only be a winner when the current system would totally collapse, and then Bitcoin would be the best hard currency available. But central bankers, they know that they can change the system, and that's the whole thesis of the big reset. So central bankers can always avoid a total collapse of the monetary system. by bringing gold back into the system, which they all own. And that's also the reason why Russia and China were allowed to build huge physical gold reserves, because China has made this point very clear to the US after the Lehman crash. We will only support the current dollar system when you allow us to build a physical gold position as large as the EU and the US has. And now they all have this large physical gold position, so they all can benefit from a gold revaluation. And that's the way they can always bring back trust into the system. So Bitcoin is very valuable for individual countries, but you will only see countries like El Salvador adding Bitcoin to their balance sheet. You won't see countries like France or Germany or the US adding Bitcoin to their central bank balance sheets, because then they need to throw in the towel. But I think there's one huge fight, one last huge fight in the monetary system, and that's the fight between fiat and Bitcoin. And that's, central bankers understand this, and they try to build their own central bank digital currencies now in a way that they can spin these currencies to get people to invest more and more of their money in the central bank digital currencies and to forget about Bitcoin. But I think that won't work, because the more central bank digital currencies which will be created is just another layer on top of this fiat money system. So the more central bank digital currencies will be created, the more smart money will flee towards Bitcoin. And you could even reach a point in which the G20 countries will decide that it's no longer allowed to exchange your Bitcoin to fiat currency. So you can close the on and off ramps. And we've seen some of the first signs of that developing. If you have a bank account here in the Netherlands as a company, so not an individual account, but a company account, there are a few banks here in the Netherlands who don't allow you to make any payments to exchanges if you want to buy Bitcoin.
Willem, my final question for you is the following. It's been great to hear your analysis of the big reset, which is a long-term thesis. What would have to happen in the world, something that you see that would make you think it again, make you say, actually, there was the conditions for the big reset, but now there's this new phenomenon, so it's either less likely, or I have to think of a new thesis because this new thing happened.
I was speaking about us being in the financial endgame for the first time, I think in 2011. And then I started to think more and more about the problems in the international financial system. Almost all of my books were about the problems in the world's financial system and the financial crisis, which started in 2008. And I was always asked, what's the solution? And in the first few years, I always said, I don't have a solution. I'm very glad that I see the problems and can analyze the problems. But as I learned more and more about how central bankers plan and work and what they've done in the past, I became more and more certain around 2012, 2013, that there would be a way out of this great financial crisis. And that's why I started to work on the big reset. And once I had enough confidence to publish the big reset, because I was quite sure that around 2020 we would need to have these big changes, I started to look for all the signs that they were working on this reset. And when Klaus Schwab of the World Economic Forum published the Great Reset in 2020, a few months after the COVID crash, it became very clear that the elites, the power structures in this world are working actively on reset plans. So I'm more convinced than ever that a reset is needed. And what's happening now in Ukraine and around Russia, it even convinces me more. So the idea that we can go back to a very stable financial system without any inflation, without any serious crisis, there's zero chance that that can happen. We need to have big changes into this world financial system, world monetary system. It has been done in the past. It can be done again. But we need to cooperate, and we need Asia to be part of it. We need China to be part of it, and we even need to be Russia to be part of it. So it will be an interesting few months or few years.
It definitely will be. Willem, it's been fantastic having you on my podcast. Where can people, if they want to learn more about your work, where can they find your work, find what you're doing these days?
Yeah, they can go to our website, Commodity Discovery Fund, cdfund.com. People can download the Big Reset for free on that website, so that can be of any help. And I'm very active on Twitter, so just Google my name. It's W Middelkoop, but just Google my name and Twitter, you'll find me there.
Well, Willem, thank you so much. It's been a pleasure having you on Forward Guidance.
Thanks.